Hi, Gary here. When I started in business 30 years ago, I remember going out to this gentleman and he was looking at buying some disability insurance. And he said, I'm not doing it. I'm insurance poor. And I didn't quite know what that meant. And of course, it took me a little while to figure that out. But basically, he said, he just had way too much money going into insurance and he couldn't really make any money in his business. And that's understandable. Look at us today. Basically, you have to have automobile insurance. You really have to have health insurance. And, if you own a home, you better have insurance on protecting yourself against, fire and theft and everything else. I mean, it's important to have those ones. And, if you're working, then you probably have a one-time salary life insurance. That's probably enough to take care of burying you, paying off a few bills and so forth. So, when you bring up the subject of a life insurance, it gets a kind of a cold feedback because nobody really wants to pay for it. Nobody wants to think about that, about their mortality. So it's not a pleasant subject, and it's another insurance cost. However, it becomes important at certain points in our life. Now, if you're single and you're out there and you're working, it doesn't really matter. I mean, something happens to you, sure, you're taken care of. If you're married, you're living together, might make a difference because you're looking at bills that maybe both of you have in the form of, autos and homes and student loans and other things like that. But the big one really gets most of us is when we have children, because no one wants to leave this earth without providing for their child. I mean, it's rare anybody wants to do that. And it's not cheap to raise a child. There was a report put out in 2014 by the U.S. Department of Agriculture that says it costs $250,000 to raise a child from birth to age 18. It's the average cost of the country. That's without inflation adjustments. So it is not inexpensive. So when you're looking at covering that cost, there's a lot of different ways to figure out how much insurance you might want to have. And really it falls into two major categories. One being income replacement. So if you're making X amount of dollars per year and you're supposed to do that for so many years, and then you can figure out a lump sum on that. And the second, which can be additive, is paying off certain loans that are out there. Again, talked about auto and home and student loans and those kinds of things. But more importantly, it's really trying to make sure for most folks who have children to take care of those child costs. So I just thought I'd give you a couple little costs for insurance so you can get an idea what it costs. So if you take a male, age 30, in good health, and you go out and buy 30-year level term insurance, term life insurance, what does that mean? It means you pay a level premium every year, annually, for 30 years, and the death benefit stays the same. And so if you die, the claim is that death benefit. There's no cash failures, no buildup of anything. It's just purely paying that cost. And believe it or not, at age 30, for $500,000 for 30 years, it's only $400 a year. It's not expensive. For $1 million, it's $725 a year. Now, this is quotes I did on a Google search to see what that would be. So it is whatever it is based on your health and so forth. But it gives you an idea at least of the cost of that. Now, why did I pick 30 years? Well, because typically by age 60, for a lot of folks, are able to have the children raised, and a lot of the other expenses, form of loans and homes and so forth, are paid off, mortgages and so forth. And so that there's really not as much a need for insurance. So just to get that bare bones taken care of, something should happen. And also, there was another study I looked up from the Social Security Administration that said, if you're wondering, how many men would not be there from age 30 to age 60 in a cohort, it's roughly around 10 to 12%. You can see that here. So yeah, there's the probability is 10% or so, I guess. I'm not an actuary, so I can't say for sure. So it's certainly something to consider, to look at, to make sure you got that area covered, and hopefully you won't be insurance poor at those low-level premiums. That should not be the case. So until next time, enjoy.